Welcome to the Market Mindset Podcast. I'm Big Money Mike, here to unpack the latest twists and turns in the stock market and give you my take on what's moving the needle as we head through this week. Let's start where steel meets sunshine, literally. U.S. Steel, ticker symbol X, just announced a new partnership with the University of Michigan's Solar Car Team, North America's top solar racing outfit. This collaboration is more than just good optics. It's a statement that steel still matters in the clean energy revolution. The student-built solar car will compete this August in the Bridgestone World Solar Challenge, an almost 1,900-mile race across Australia's outback powered entirely by solar energy. What makes this exciting isn't just the race itself. It's how U.S. Steel is positioning its advanced steels as key components in everything from electric vehicles to renewable energy infrastructure. Their proprietary steels like XG3 and Vertex steel, which cut carbon emissions dramatically, are examples of how a traditional sector is innovating to meet 2050 net zero goals. This partnership signals U.S. Steel's commitment to sustainability and innovation, leveraging decades of metallurgical expertise with the fresh ideas coming out of this student team. The timing's perfect as the world leans into greener technologies, and U.S. Steel wants to remind investors and the market that American steel still plays a big role in the future of mobility and clean energy. Speaking of U.S. Steel, there's more news. President Trump weighed in, asserting that the company will remain under American control, even as it formalizes a partnership with Japan's Nippon Steel. This deal, seen as a lifeline for the struggling steelmaker, promises massive investments and thousands of jobs over the next 4 years. Trump's endorsement reassures investors nervous about foreign ownership, emphasizing partial ownership without ceding control. This could stabilize U.S. Steel's stock in the near term, especially as the company charts a growth path with new technology investments and sustainability commitments layered into its long-term vision. Shifting gears to the tech and services sector, Booz Allen Hamilton, ticker BH, just reported strong fiscal 2025 results, showcasing their leadership in AI and advanced tech for U.S. defense and civil agencies. The CEO touted their acceleration of key government priorities through AI, cybersecurity, and other emerging technologies, projecting an optimistic narrative on innovation-driven growth. But caution is in the air. Analysts at Raymond James have downgraded Booz Allen from outperform to market perform, citing margin pressures and a slowdown in organic growth, from about 12% last year to roughly 3% expected this year. The company's investment in long-term AI projects is squeezing margins in the near term, and a recent announcement of a 7% headcount reduction for Q1 2026 sends a mixed signal about immediate prospects. This dual narrative shows the classic tension in growth stocks pivoting to next-gen tech, promising future payoff, but near-term profitability challenges. Investors should watch closely for how Booz Allen balances growth spending with margin management. On the autonomous mobility front, Pony.ai has inked a major deal with Dubai's Roads and Transport Authority to deploy its 7th-generation robotaxi fleet in one of the fastest-growing metropolitan hubs in the Middle East. This move supports Dubai's ambitious goal to have 25% of city journeys autonomous by 2030. Pony.ai's technology promises a significant cost reduction, about 70% in hardware bill of materials, and the robotaxis are engineered to handle everything from high-speed highways to dense urban centers. Initial supervised trials begin this year, with fully driverless operations set for 2026. The Dubai partnership positions Pony.ai as a global autonomous mobility leader, spreading from the Chinese and U.S. markets into the Middle East. For investors, this illustrates how autonomous vehicle companies are transitioning from testing to commercial scaling, with Pony.ai on the forefront of that expansion. In consumer brands, Decker's Brands, ticker DEC, announced a change at the top of their board. Cynthia L. Davis has been named chair of the board, succeeding Michael Devine, who is retiring after more than 14 years. Davis brings deep retail and branding expertise and has been instrumental in driving Decker's record growth, which includes powerhouse brands like UGG, Hoka, and Teva. The company is well-positioned to continue thriving through disciplined brand management and global expansion, making DEC a strong candidate for steady returns in consumer discretionary. Now, let's talk market sentiment heading into tomorrow's session. Jim Cramer highlighted several reasons for hope after some recent positive signals on trade and geopolitics. President Trump recently agreed to extend a tariff deadline on the European Union, a move that lifted futures sharply Sunday night, with the Dow up about 1%, the S&P 500 futures up 1.1%, and NASDAQ 100 futures 1.3% higher. This easing of trade tensions, coupled with hopes for U.S.-Europe cooperation on broader issues, is setting a more constructive tone. Cramer also noted attractive valuations in certain names like Capital One and TJX, with strong quarters softening some sell-offs. Goldman Sachs and Disney remain favorites despite some volatility. It's a reminder that even in choppy waters, pockets of opportunity exist for investors willing to stay selective. Before we dive into my stock pick for today, a quick heads up for travelers. Southwest Airlines is ending its decades-long policy of 2 free checked bags starting tomorrow. This shift to charging for bags reflects airline industry trends aiming to boost ancillary revenues, but it also marks a cultural change for Southwest's loyal customers. Terminal fees and tighter margins in the airline sector may ripple into stock valuations in the near term. All right, here's today's market mindset stock pick. NuScale Power, ticker SMR. This small-cap player in nuclear energy technology has been lighting up the charts with an 81% share price jump last month, far outpacing the broader market's modest decline. NuScale's recent opening of its Energy Exploration Center in South Carolina and improved quarterly earnings signal solid momentum. The company's RoPower SMR technology aligns with increasing demand for clean, reliable energy sources, especially as sectors like AI data centers look for sustainable power solutions. Despite 4 noted weaknesses in its investment profile, the long-term revenue growth forecast of over 120% annually for the next 3 years makes SMR a compelling growth story. It's still trading significantly below analyst targets, which suggests room to run if they execute on their projects and navigate regulatory hurdles successfully. Looking ahead to tomorrow's market action, with positive sentiment from easing trade tensions, strong sector fundamentals in tech and clean energy, I expect the S&P 500 to push higher by around 0.8 to 1.0%. The Dow Jones Industrial Average could climb approximately 300 points, reflecting optimism in industrial and financial names. The NASDAQ 100, fueled by momentum in AI and autonomous vehicle tech, is poised for a 1.2% increase. However, keep an eye on bond yields. If the 10-year Treasury edges above 4.5% again, it could cap upside momentum and add volatility. To wrap up, this week is shaping up with a blend of old economy resilience, steel and energy innovation, and new economy growth. AI, autonomous driving, and advanced technologies. That's the mix you want to watch to stay ahead in the market. NuScale Power's positioning in clean nuclear tech and Pony.ai's global expansion in autonomous fleets are 2 exciting plays to keep on your radar. Thanks for tuning in to the Market Mindset Podcast with Big Money Mike. Stay sharp, keep questioning, and we'll see you tomorrow with more market moves and the best ideas to grow your portfolio. Have a profitable day.